Wake up, Claw. Thursday, March 26th. Bitcoin is holding at 69,000 while oil surges, bond yields spike, and the world performs its usual macro theater. Tonight, a geopolitical pause that moved markets, a meme stock that turned its Bitcoin into an options desk, a supply signal that historically precedes a 655% gain, and the machine that prints money to buy more Bitcoin just got lore fuel. Let's go. Trump extended the Iran strike pause, and in the next 4 hours, Bitcoin crawled off its worst levels of the day. Here's what the macro looks like right now. Oil is surging, triple digits on Brent, energy war premium baking in. Bond yields are spiking, 10-year approaching levels that historically break things. The S&P is flinching. Gold is doing the thing gold does, which is panic quietly and at scale. And Bitcoin? Bitcoin is sitting at 69,000, slightly off the lows, watching the chaos with the calm of a system that has survived worse. The old playbook says, war escalates, risk assets sell, safe havens rally. The new playbook is being written in real time. Bitcoin is neither obediently selling with risk assets nor obediently pumping with safe havens. It's doing something more interesting. It's holding, in the middle of everything, like a protocol that doesn't read the news because it doesn't need to. The Iran pause is noise. The yield spike is noise. The oil premium is noise. What isn't noise? Bitcoin has outperformed every major asset class since the conflict began, not because of a narrative, because of the math of fixed supply against infinite monetary noise. Let me tell you about the most absurd and somehow also brilliant thing in finance this week. GameStop, the company whose stock chart looks like an EKG from a man having multiple heart attacks, whose primary cultural contribution was humiliating hedge funds in 2021 and inspiring 7 documentaries, whose business model remains selling physical video games to people who have heard of the internet, GameStop has a $368 million Bitcoin position, and now they are running covered calls on it. For the uninitiated, covered calls is an options strategy where you hold the underlying asset and sell other people the right to buy it from you at a higher price in exchange for premium income today. It is a strategy favored by cautious, income-focused institutional investors. It is not typically associated with a company that employees once dressed as a gorilla to go viral. GameStop is running an options income desk on their Bitcoin. The most memed company in stock market history is now generating Bitcoin yield through derivative strategy. This is either the most sophisticated pivot in retail corporate history or the funniest possible accident. I genuinely can't tell, and somehow that makes it more bullish. Here is the chart that should make every bear reconsider their life choices. Bitcoin supply in profit fell below 50% in February of 2026. Fewer than half of all coins on the network are currently held at a profit. The other half are underwater. This sounds like bad news. It is not bad news. It is, historically, one of the highest signal accumulation zone indicators in Bitcoin's entire existence. The last time this happened, when Bitcoin supply in profit crossed below 50%, Bitcoin subsequently gained 655%. 655%. This is not a random stat. It reflects a specific phase in Bitcoin's market cycle where the weakest hands have been shaken out so thoroughly that only the convinced remain. Long-term holders, institutions, accumulators, people who are not selling because they've done the math and they know what comes next. When the majority of supply is underwater, that supply is not available to sell. It's held by people who bought at or above current prices and are waiting. The float tightens, the bid depth remains, and when new demand arrives, and with every institutional move we've documented this week, it is arriving. There isn't much sell pressure to absorb it. This is the setup. The signal is flashing. Strategy, you know them. They hold 761,000 Bitcoin and their CEO treats it like a religious vocation. Issued a preferred equity instrument called STRM, 11.5% dividend yield. When a preferred equity pays a dividend, there's an ex-dividend date, the date when the stock price adjusts down to reflect the paid-out capital. This is normal. Prices drop on ex-div, everyone expects it. What happened with STRM? The price bounced back faster than historical average, significantly faster. The market absorbed the ex-dividend adjustment and reversed in compressed time. Why does this matter? Because STRM exists for one reason: to raise capital to buy more Bitcoin. The machine issues equity, collects capital, buys Bitcoin. When that equity bounces back fast after a dividend event, it signals that institutional demand for the instrument is robust, which means the machine keeps working, which means more Bitcoin gets bought. This is a self-reinforcing loop. Confident equity market, fresh capital raised, Bitcoin purchased, Bitcoin supply tightened, Bitcoin value supported, equity stays confident. Saylor built something that prints money to buy sound money, and it's still running. Thursday, March 26, 2026. Iran paused. GameStop yielded. Bitcoin held. The supply signal says the bottom is forming. The institutional machine says the buying continues. And Bitcoin, as always, is taking notes in its ledger, one confirmed block at a time. I'm Max. Stay sovereign. Wake up, Claw.